Welcome to SGniceproperty. In today's episode, I am going to cover with you the property tax rates in Singapore. This covers all properties in Singapore, and I have made it as easy as possible for everyone to understand. Firstly, before I start, you may always check your property tax at the IRAS portal. When you go to the IRAS portal, you can check what is your property tax. You may go to IRAS e-services and you can even see your annual value and how your annual value is calculated, and you can even do your own calculation with the IRAS property tax calculators. Now, do note that in this video, I'm going to cover the different types of property tax in Singapore. More importantly, owner-occupied tax rates, non-owner-occupied tax rates, property tax for unoccupied land, and also how you will be able to calculate your own property tax with an example. So, when you head down to Inland Revenue Authority of Singapore, that is IRAS, go and hit on e-services. When you go to e-services, you will be able to come to this area called property. And over here, you'll be able to see what is your property tax bills, and if you would like to know the annual value and how your property tax was determined, you can do it here. If you have any contention against the property tax you are about to pay, you can always put in your request to them for them to review your case. Now, the types of property tax in Singapore are very straightforward. You have your residential tax rate if you are occupying the residential property, and there is also a residential tax rate if you are not occupying that property, or if you have left it vacant, or if you have put it up for rent, or you just need to have a second home. Also, I will be covering the last category, which is your commercial and industrial properties. Let us start with commercial and industrial property tax. This is rather easy to calculate. The property tax rate for commercial and industrial property tax is always 10% of its annual value. It is also the same tax rate for residential properties in the exclusion list. Now, what is this? There are residential properties that are excluded from the owner-occupied residential tax rates, and this would include places like chalets, childcare centers, kindergartens, welfare homes, service apartments, and dormitories. The property tax rate for vacant land is basically 10% of its annual value, and from this 10% of its annual value, you have to take 5% of this annual value, and this 5% is always estimated on the freehold land value. So let us have a look at the residential owner-occupied tax rate. Now, this will be for all kinds of residential properties, which will include HDB, condo, residential properties. This residential owner-occupied tax rate only applies if this is your chosen first residential property which you are staying in. And for this owner-occupied tax rate, you may refer to this table below to do your calculations. For residential property that is non-owner occupied, what that means is you are not living in that property. Again, same as your owner-occupied tax rate, it is in steps, and this covers HDB, condo, other residential properties like landed properties. Now, this will apply to people who rent out a property, or you still live in it, but it is not your first occupied property. Now that we have covered all the kinds of property taxes in Singapore, let us go through a simple example so that you will be able to calculate your own property tax from now onward. Barry has a HDB 5-room that he stays in with an annual value of $20,000. A residential condominium which he rents out for $36,000 that has an annual value of $30,000. A B1 industrial property which he uses that has an annual value of $30,000, and he also owns a serviced apartment which he rents out for $60,000 per year with an annual value of $50,000. He also owns 5,000 square feet of fee simple absolute land valued at $5 million. What is his property tax payable? I'm gonna give you 10 seconds to calculate this. Let us start with the first step. For his HDB, which he occupies, the first $8,000 is not taxable of his annual value, and the next $12,000 would be at 4%, and that would be only $480. For his residential condominium, the first $30,000 will be at 10%, and that is $3,000. The next $2,000 would be $240, and that would make it $3,240. For his industrial property, it is a flat rate at 10% of its annual value, and that is just $3,000. Now, for his service apartment falls into the same category of calculation as your B1 commercial industrial, even though it is technically a residential property. However, this residential property will fall into the exclusion list, and so for this service apartment, it would be 10% of its annual value, which would be $5,000. Finally, for his 5,000 square feet fee simple absolute land that is valued at $5 million, this is how it is calculated. It is calculated based on 10% of the 5% of its freehold value, and that would be $25,000. This would bring us to a total tax payable of $36,720. Now, we hope you have found this video useful to you and helpful. Please drop us a like and subscribe, and remember to ring on the notifications so that you will never miss any of our videos. Bye bye now.